How's it going, everyone? Today is January 14, 2021. This is Israel, your loan officer down here in Southern California. Okay, this is the day we were waiting for. Mr. President-elect Biden is going to announce the new stimulus package. This is going to happen at around 7 p.m. So again, the markets are in a little bit of a hold, but we do have the information from the Federal Reserve. In fact, they asked Mr. Federal Chairman Powell if he was going to continue the purchasing of bonds. And well, let's listen to what he said.
You mentioned the bond purchase program. So we had a primary facility, and it closed on December 31, but where we were willing to lend money directly to companies. And then we had really as a way to get a grip on financial conditions in the non-financial corporate market at the height of the crisis, during the really acute period, was a secondary market where we would buy.
The secondary market that he's talking about is the government. Basically, they wanted to jump in and start purchasing these treasuries. So continue on.
That's a decision for Congress. You know, we really shy away from anything to do with credit allocation. A lot of different factors. That's what, elected people are elected to do.
So he was really cautious. This is typical of the Federal Reserve. They almost talk in code. From what I was able to gather, he's basically saying if the government needs our assistance, we are going to continue to help as long as we can help this economy ramp up again. And so with that, the word of the day, if we want to call it that, is equilibrium. That's what we reached as of today. Again, we were hoping to have an announcement from President Biden as far as the stimulus package. We didn't. So there's a little mix of both reactions with the market. In fact, let's go take a look at what occurred with today's reports in reference to the continuing jobless claim. As you can see, we're still down to 5,072,000. Those are the people that are still continuing to receive unemployment. And the next figure, which wasn't what everybody was hoping for, but it looks like there was 965,000 new jobless claims. Again, it's going down, as you can see on the graphs, and hopefully with today's news from Mr. Powell, they're going to continue purchasing these treasuries, these bonds. Also, they asked them if they were going to increase interest rates. The response to that is basically, if we're buying these bonds are what's going to drive these rates to continue to be as they are. Now, another piece of the clip, they asked if they were worried about inflation. And again, there was a video that I posted a week or so ago. You can look it up at a link. You can click on that. And he basically says that they're going to try to maintain it below 2%. But come 2013, you can definitely expect inflation rates to start climbing. And so what are they signaling there? Well, they're going to continue to maintain these low interest rates, even though they're going to be little hiccups here and there like we had last week and throughout this entire week. There's going to be a little bit of hiccups here and there, but for the most part, they're going to contain those interest rates as low as they can. But they are aware of inflation. And when that comes, get ready. And he does mention that they are going to start letting people know ahead of time when that starts looking in the horizon. All right, let's jump on to now how the mortgage-backed securities market reacted. -2, pretty, again, equilibrium, right? It's not too high, it's not too low. It's right where we would want it to be, at least up until President Biden announces the new stimulus package. And these are the rates as of today. Not a lot of changes. The only one we did notice was for anyone with a 660 FICO score, they're looking at a 3.375. Hardly of a change. If you want to consider that, only like 0.001 change. Competition wise, they're looking at 2.99, 2.875, and 2.725 with a FICO score of 720. Now let's go take a look at the other program, and that is the 30-year fix with a 3.5% down payment. Changes, yes, the people with the 700 middle FICO score, they're looking at a 2.5 interest rate as of today. Take a look at the competition. 2.625, 2.75, and 2.75. You would require a 740 plus FICO score to be able to qualify for what they're offering. With us here, you can come in with a FICO score of 660, and we would still be honoring or offering you a 2.625 for a 30-year mortgage interest rate. With that, I like to finalize. Again, there's a lot of information that's going to be happening throughout the days. But to me, one of the most important ones was the Federal Reserve basically saying, look, we're going to stay on track. We're going to continue to buy these treasuries, and we're going to wait to see if there's signals that inflation might start scaling up. We're going to try to combat that. So if you are thinking about making that purchase or refinancing your property, give us a call at 661-388-7667. If you're a homeowner and thinking about putting your house on the market, give us a call. We have a great team that would be able to help you on that as well. 661-388-7667. Again, I'll keep an eye on what the new stimulus package is going to be at 7 p.m. and I'll report any results that I have and what the implications were with the mortgage-backed securities. May God bless you. May God bless our nation. And I'll see you guys tomorrow on the next video. Take care. Bye-bye.